Hi, everybody. Tyler is joining me. We are going to talk about our largest stock investments, the companies that we put the most of our money behind. So, again, Tyler's joining me. A lot's changed in the market. I know the largest position in my portfolio isn't the same as it was a year ago because, prices have moved all over the place. So, we're going to get into that in just a second. Before we do, take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work we're doing on YouTube. Again, fool.com/Frankel, and I'll put that link in the description. So I guess I'll go ahead and start. But Tyler, let me ask you just one quick question. Is the biggest stock in your portfolio, did you intend it to be the biggest stock, or did it compound over time and get there on its own?
Oh, it got there on its own, and my section is going to be an ode to reinvested dividends.
Okay, and I like that because mine, I never really intended to be a top position in my portfolio. In fact, I never owned it until about 2021, even though it's been a favorite among some of our Motley Fool colleagues for a long time. And it is Mercado Libre. Ticker symbol is MELI. They're often known as the Amazon of Latin America, even though that doesn't really do it justice. There's a lot more to the business than that. It's been a great growth story over the past like 20 years. But like I said, I didn't own it until the pandemic era, essentially cut the price in half from what it had been trading for before, um, which is silly because it's an e-commerce business, and when everyone had to stay at home and shop online, it seemed like a natural fit. So I've added to it a little bit since. The 2022 downturn is really when it became a more intentional large position for me. That's when I added to it more aggressively. It's a leader in a very big market. There are a few different components to the business. The big two are e-commerce and fintech, or financial technology. In the second quarter, the e-commerce platform, it's getting really big. It did $15.3 billion in sales. That's 21% more than a year ago. The number of active buyers on the platform, hold on, sorry, I got like a sneeze coming on. There we go. Three, two, one. The number of active buyers on the platform is up 25% year over year. That is an acceleration and the highest growth rate they've had since 2021. Doing a great job of executing, really deepening their relationships with customers. Picture like Amazon a few years ago, like how I know Tyler's not in the U.S., but for the U.S. people watching this, how has your relationship with Amazon evolved over time? Even though Amazon's been the leading e-commerce platform for like 20 years, people's relationships have deepened. I know a lot more Amazon packages show up on my doorstep than did, 10 years ago. So they're doing a really good job at that. They're rolling out a premium platform, or they just recently revamped it, called Meli Plus, which is like their Amazon Prime, I guess, think of it as. On the fintech side, the growth is even more impressive. And about 40% year over year growth in payment volume through the Mercado Pago platform. They're building a credit portfolio on like business lending and credit cards and things like that. That grew by 91% year over year without any uptick in loan losses, really. The 23% net interest margin after losses, which is, any U.S. credit card issuer would be very envious of that. Um, and Latin America, where they operate primarily in Brazil, Argentina, and Mexico. And all three of those are in much earlier stages of both e-commerce and fintech adoption than we are in the United States. So big opportunities here. The stock is down a little bit in the past few weeks after earnings. Pretty much margins weren't what investors were looking for, and especially because some of the margin decline was due to increasing credit losses. Not that as a percentage, credit quality is very strong in that credit portfolio, but if your credit portfolio is growing by 90% year over year, it just stands to reason you're going to have some credit losses in there. So Mercado Libre is my number one investment right now. I don't know that I'm going to add much more at the current price levels, just because it's already such a large investment for me, and I would need a really compelling time to buy to justify adding. But I'm not planning on selling any. Tyler, I bet you're going to talk about a company we're a little less familiar with.
A little bit. And like I said, this didn't intend to be my largest portfolio. I kind of nibbled at it here and there. I started investing in 2018, and it's MPLX. The name is the same as the ticker. It's a oil and gas pipeline master limited partnership. Master limited partnership, of course, means preferential tax treatment to pay large dividends or distributions to your investors. And as a result, that's kind of the reason why it's become the largest position in my portfolio, is the beauty of reinvested dividends. I personally have not put any new money into this position in quite a few years, actually. I've just kind of embraced my very, very lazy investor and just kind of let it sit there. And I from a business, it's not from a business perspective, it's kind of the business that you can do that with. They own most of the pipeline infrastructure to service Marathon Petroleum's refineries. They're majority owned by Marathon Petroleum. It was spun out of the company several years ago, and so it has obviously agreements with them for moving crude oil either through pipelines, through storage, or other logistics assets. It also has a relatively large natural gas processing gathering division as well, and that's kind of where the growth is in this business, is from growing natural gas because there isn't a lot of growth in terms of refinery capacity in the United States, so you're not building a lot of whole new pipelines to feed refineries and things like that. So all in all, it's a pretty stable business. Marathon Petroleum has run it very conservatively. It keeps, for a master limited partnership of pipelines, it keeps a relatively low balance sheet. I think its debt to EBITDA ratio recently, it was something below like 3.5%, which is typically considered very reasonable for a company in this space. I think I'm looking at it right now. Total debt to EBITDA is about 3.6 times, so very reasonable. It's the coverage of its payment is very reasonable. I think it's like 1.4, 1.5 times. That's more than enough to cover its distribution and pay for some growth in the business in terms of capital expenditures without having to, stretch anything or start to get the business in financial trouble. And all in all, just run as a conservative business, which, if I'm going to sit on my butt and not do anything, conservatively run is great to do. And hey, when you get a 7.7% dividend yield to just kind of sit around and do nothing, I can do a lot of things. And this is where, again, thinking about this is not a high growth business. I never expected it to be a high growth business. I thought it was like, hey, it pays a pretty good dividend. And if I just kind of set it on reinvested dividends, it's going to, be eventually that's going to get quite bigger. And if I look at it today, and just to give you a perspective on how powerful that can be, without really doing a lot for several years and just letting it sit there and letting, dividends automatically reinvest, I have a 20% yield on cost. So basically, the money that I personally put into my investment in MPLX, I currently get 20% yield on that in annualized cash payments. I'm never going to, that's impossible to find from new money today. And so if I know that I'm going to get 20% of my cost basis in cash that I then reinvest back into the stock, that's going to really just do monster returns over a long time. And that's how something that was a kind of the middle of the road size investment in my portfolio that is slow growth has all of a sudden accelerated into easily the largest position I own.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.